What's up, guys, and welcome back to another weekly episode of the Steely Stocks Report with your hosts, none other than Talos. And holy crap, guys, a lot of things happening in news today, and we got so much little time to do it. So let's briefly look over some of the topics for today. And yes, there's quite a bit. We won't go into too much detail every single one of these, but just as a brief look at some of these right here, obviously recapping a company known as Talos Energy, just to see where they're at. They're probably not doing as anything significant from what I see right now. There's also another company that I thought was pretty interesting, kind of an imitation company, kind of, known as Talos, T-E-L-O-S. And I just want to see what that is. I thought it was funny, but it's also in the news today because it's actually been doing quite well in one of the highs. And of course, some other highs for this week, of course, is Upstart yet again in the news. Root Insurance is in the news. Snowflake, Discovery Channel is in the news. Not just A, but also Bravo, and I believe also Charlie as well is also negative. So pretty much the entire Discovery is crashing. What's happening with Discovery? Then Lending Club comes into the picture. AMCX, which is basically another version of AMC, but AMCX is more of the network side of the house versus the actual movie theater side of the house. But we'll go into more detail with that once we roll into that topic. And of course, rolling into TME, which is basically Tencent Music Entertainment. See what's going on with them. This kind of relates a little bit to Tencent, which is of course Neo. And there's also another company there is BADU. So we'll kind of talk about all three of them. They probably relate together, so we'll kind of bundle that together. And then the last two big topics that I want to talk about is Microsoft and GME in the news for the week. Obviously, big news with GME. We'll definitely talk about that. We'll probably talk about that first, actually, so we can kind of eliminate some of the extra stuff in the bottom here. But GME, holy crap, guys, big news, big news. Obviously, this happened, I think, two days ago, I think. And my buddy, Reggie, stepped down as board of directors. And of course, we're going to find out exactly how that affected the stocks and if it's now time to finally buy in the GME. Or is it just now it's just like, no, definitely not. If Reggie's out, I'm out. So we'll talk about that as we roll into it. But yeah, so first of all, let's roll into GME right now, actually. What is really going down with GME? Now, as you can see, GME stocks right now, this is pretty much where it started. It was a huge dip here, but then it's been going back up. It actually went as high as 210 for the past, actually in today's market, and then it dipped again today, back to 160. So it went super high and then super low. This dip right here probably happened when we heard about the news with GME, like I said 2 days ago, and a stiff drop. It's dropped as low as $118. Oh man! So, oh man, that would have been a perfect time to buy, but I didn't have the funds ready for me personally to actually jump into it. So, for those who jumped in at that low point, congratulations. And of course, selling at the high, even if you try to sell that later today and at the end, before closing business, whatever, you would have still made money if you would have bought at that point. But from 100 down to almost to a double your money right there. So invested 500, congratulations, you just made 1,000. Congratulations. But it's still relatively around that $200 mark, so you still got pretty decent money when that market was high and about. So $181. So it's staying at that boat. People are definitely holding, but the fact that Reggie stepped out, that's a huge blow. That's a huge blow. It kind of sounds like the entire board race is going to be shaken down by June. And so we don't know what that entails, who's going to be picking that slack up, and how they're going to pretty much reinvent GME or GameStop in general to the future. But right now, we're not seeing that. We're not seeing that. Right now is all the meme stocks, and it's still doing pretty well. So it's holding that front. But how long is the GME going to last? But right now, we're not going to go too much detail with that. Obviously, all this is still speculative. We just have to wait and see. But of course, speaking of GameStop, guys, and of course, any of the stocks mentioned out here, definitely check out our sponsor for today's video. And that is, of course, Public. Public is an amazing company. It's pretty much a social investment app, so you can also interact with other people also interested in the same niche that you have and see what they're buying, what they're potentially talking about, and join into the conversation. And that's why I love and use Public myself. Obviously, over here in the Steely Boys community channel, we love Public and we definitely endorse it for you guys. Definitely check out the links down below to grab your slice of whatever stocks available, up to $50 of that slice. It could be GME, it could be Tesla, it can even be Google, Facebook, and all those high-end companies right there. So definitely join the rest of the Stelly community and click that link down below, join the conversation, and enjoy your free slice of stocks. All, of course, supports the Stelly Boys community channel. Now, of course, let's go back into the topics here. So let's talk about our next big topic now, Microsoft. And yes, Microsoft is going crazy right now because of its possible big news. Let's talk about it real quick before we get into the actual graphs here. But as you can see here, Microsoft is in exclusive talks to acquire Discord. Now, for those that may not know what Discord is, it's pretty much, imagine it like Skype, but way better. Pretty much Discord is like a community of like just typically gamers or those in the gaming culture. It doesn't have to be gaming like specifically. It could be anime, it could be, you know, stuff like that. Think of it, Discord more like a chat app than anything, but it's great, definitely in huge popularity and huge strides. Especially a lot of YouTubers use it to kind of game with their friends, and it's just a much more user-friendly, gaming-centric focus app. They can use it on your phone, you can use it on your computer and all that good stuff. And this is pretty much what it looks like if you see the picture here. But basically, deals valuing of the chat app at around $10 billion. I think currently they're evaluated around $8 billion, but Microsoft wants to buy them for $10 billion or more, according to this article, to be completed by next month. Now, this is huge news, and that's why Microsoft has been spiking dramatically. So let's read a little bit about this article real quick. Microsoft Corporation is in advanced talks to acquire messaging platform Discord for $10 billion or more, according to people familiar with the matter, as the software giant seeks to deepen its consumer offerings. Microsoft and Discord are in exclusive talks and could complete a deal by next month, assuming that negotiations don't fall apart. That's the big one. That's the big one. Now, obviously, Discord can also go public themselves. So they don't necessarily need to be partnered up with Microsoft or even be bought out by Microsoft. So it kind of depends what they want to do with it. They can either go public or join up with Microsoft. Now, it says here real quick, the platform's popularity has surged since the pandemic and took hold as people stayed home and connected online. So yes, huge spike last year. And I definitely see them growing even much more. Now, if they go public on their own, dude, definitely a big watch for me personally, and I think you should as well. Obviously, I'm not a financial advisor, I can't tell you what to do with your money, but I think Discord is a great investment if they go public by themselves. Now, if they join up at Microsoft, cool. I do have Microsoft stocks, so it will go up a little bit, but Microsoft is they're very notorious. They're very notorious for buying stuff and like they're super excited, super hyped for it initially, and then they kind of dwindle it off. It's kind of like that guy, well, kind of like me actually, where basically you go into like a video game store, buy a brand new video game, but forget about the 10, 15 video games that you just bought like a couple of months ago and just never play it because you're so excited about that one game. And then maybe a week or two later, a new game comes up and you get excited for that, forget about what you just bought. And that's how I think Microsoft plays, because they have so much money to play around with. Perfect example, think of Mixer. What happened with Mixer? Gone. Zoom? What happened to Zoom? Gone. Microsoft phones, what happened to that? Gone. Skype still exists, but not as high, especially as much as Discord, if you want to compare apples to apples in a way. So Microsoft, not a good track record for buying and I guess bettering the company, if you want to call it that. So I think Microsoft buys it, it's going to be a huge hit for Discord, and for those that use Discord and like Discord, I don't know, because of the track record from Microsoft, Discord might go away. I don't know. I'm hoping not, because I love Discord. I use Discord all the time. Guys, we have a Discord ourselves, the Stelly Boys Community Discord, so definitely check out the links down below. You know, cheap plug, but definitely check it out. We talk about stocks there. We talk about gaming topics, Yu-Gi-Oh content, Pokemon content, anything nerd related that we're just interested in. Gaming news, stocks, all that good stuff in our Discord. Check it out. Right now, not looking too excited with the Microsoft merger or buy off, if you want to call it that. And even if Microsoft buys it, the stock value for Microsoft is going to be insignificant in terms of the growth from Discord. But if Discord goes public on its own, that will be huge. I will definitely be watching it, and I would definitely consider buying it in as well from IPO. And I normally don't buy stuff IPO, But there is an IPO ever in discussion with Discord, I'm definitely going to be considering it at IPO date. Microsoft, of course, valued around $1.7 trillion, so they can definitely afford a little 10 billion, you know, a little 10 billion to a 1.7 trillion. But yeah, guys, definitely watch out for this one. And of course, if you just look at the chart real quick, this is the chart. Obviously, when the news broke out, they were spiking up. They were spiking as high as 240. They kind of dwindled a little bit, but they're averaging around 230, 236 roughly. But huge news. Definitely be on the lookout for that. But let's roll into our next topics. Obviously, guys, that was pretty much the two biggest news for this week, Microsoft and GameStop. But now we're actually rolling into finally the highs and lows of the week, because obviously Microsoft and of course GameStop was in the lows for the week because of what happened with Reggie, but for the most part they're not the highs of the highs and the lows of the lows, similar to the rest of these pretty much. But these are just what stuff that I want to talk about. A company that I find interesting was more like a meme than anything, but another company. But this is a pretty relatively new company that I know of. But they sound kind of interesting though. But they're called Talos Corporation, and Talos Corporation here is a let's actually flip over to the charts. So like basically Talos company here is a provider of cyber cloud enterprise security solutions for the security conscious operations, and they're based on Ashburn, Virginia, and they're mostly in the buy, honestly. So they seem like a pretty good buy. So they have a five strong buys and 2 buys, and this is their 3-month history. Pretty average for the most part, but obviously 3 months ago they were much lower. But let's look at a little bit more of a history. Let's do 1 year. Great. About 1 year ago, $20, and you probably hear my dogs barking in the background. Their mom just came home, that's why they're barking. Yeah, so great stuff happening here. Obviously, we may follow them because they are kind of named after me. But for the most part, I do love cloud and security and all that. That's kind of like my main field right now that I dabble in terms of the IT field. But for the most part, they are around $37. I don't know where they're gonna go from here. Let's see. Is there a max history? They're pretty new. Actually, they're very new. Wow. So the IPO'd around December, looks like. We'll keep an eye out for them. So obviously, cloud and security is big. So they're probably going to be pretty important for the most part. So let's roll into another company that we talked about last week, Upstart. Now, Upstart, for those that may not know, is a lending platform partnering up with banks to expand access to affordable credit. And if you guys recall, last week there were negotiations to have a inclusion of adding auto loans, and that's what we talked about last week. So definitely check that out. Link, of course, somewhere over there. So definitely check that out if you guys want to check out our previous discussion. So we won't go into too much detail about that right now, but I'm curious to see why it spiked up yet again. I got a text. Let's roll into some articles now on this company. But of course, the big question is why? Why is Upstart going up, especially in the past 3 days? Upstart's shares are up 171%, huge, in 3 days as momentum pours into the fintech company. Upstart said last week that it expects growth to accelerate in the first quarter. Big news, as an investor. This is the shock face that everyone needs. Everyone needs that shock face. In the year of the historical wild stock moves, often driven by chatter on Reddit boards, financial software venture Upstart Holding is the latest company to see its stocks roar in the inexcusable heights. Words. It was founded by a former Google executive. That's quite cool. It went public back in December. We knew about that from last week. Upstart's rally includes a 32% jump on Monday to close at $160. It's reminiscent of stocks such as GameStop and AMC, which rocketed up to back in January. But the big difference here, of course, is not really fueled by Reddit, according to this article. So unlike companies fueled by Reddit, Upstart did not get an initial jolt from some actual positive news. After the market closed on Wednesday, Upstart reported 4-quarter revenue growth of 39% from the years earlier to $84.4 million, and saw operation income almost triple to $10.4 million. So yeah, massive growth, and we could definitely see that in the chart right here. Look at this massive growth. Now, it wasn't the highest it's been. The highest has been, of course, $162. And it's been kind of going up and down pretty sporadically for the past couple of weeks here. Yeah, right now it's kind of floating around $142 and huge potential here. Right now there's 3 strong buys and 1 hold, but for the most part it looks pretty much positive news for the most part. What's not positive news is Lending Club, which is also a company that does lending. But it's falling into the lows for the week. But we'll definitely get into that later in this video. Another application here that really has spiked in the highs is a company known as Root. Root is pretty much an insurance company, similar to, like, I guess Geico, but I guess it's a lot more user friendly. There's pretty much like, you go to the app, you find out what your rates are, you accept, and boom, there you go, there's your rates, and you are insured for that vehicle. And they typically, I think from their advertisements, they typically only approve those who already have a clean record. There's ideas that go around basically for insurance companies that they can only, no matter if you have good driving records, no accidents whatsoever, they still charge you like crazy values because other people in that company have accidents and terrible driving records and all of that, and they kind of pull some of those costs into you even though you have a good driving record. And that's where Root comes into play, where basically they don't insure those that pretty much have bad driving records, because that's how they keep their costs so low in terms of insuring their vehicles. And they've been kind of going up in stock value recently, and I'm kind of want to dabble into that a bit more. So let's flip over. As you can see, Root here, it's a parent company, a Root Insurance company. It's a technology company revolutionizing the way of personal insurance with a pricing model, kind of like what I just talked about. And they're currently floating around $14. But if you look at the 3 months, not so great in 3-month history. They actually had a massive dip, pretty much starting February, was it 2003? Pretty much February 3rd of this year. And it's been kind of dipping down. And it's been recently picking up the steam recently here in the from his low mark of around 11, like less than $10, or right around $10, and it's been going back up to the $14 mark. Let's see if there's a longer history, if anything. Yeah, so for the most part, they have been doing super well. I think the IP, yeah, that's the earliest. Okay, so it looks like they kind of IPO'd around, they IPO'd super high, so they haven't been able to reach their IPO price in a very long time. According to this, around January. No, sorry, around, I guess, October 2020. But of course, we already know what happened with 2020. Not much people are even driving. They're at home. They're doing, they're working from home. So there's a lot less driving going on. So that's probably why the drop. So they kind of IPO'd at a very long time. But it doesn't mean, though, we're going to be staying like that forever. Eventually, there will be insurance and they need it. That another potential dip to this is also the rise of almost autonomous vehicles as well. So that also might be a hindrance in Root Insurance, or any insurance company for that matter, because in theory there shouldn't be accidents with autonomous vehicles if they're done correctly and all that stuff. And if everyone has an autonomous vehicle, then in theory there should be no accidents and no need for insurance companies. That's still a long way down the road. There'll still be a reason to have insurance, and Root is kind of like in that ground where they'll show you for what you're actually worth, not how everyone else is in that network. Is $14 a good buy-in? Like we talked about, the insurance companies, like car insurance, is still going to be needed. So as if they can somehow expand to other insurance instead of auto insurance, maybe do like home insurance. I don't know if they do home insurance or not, but if they do home insurance, or if they do possibly like motorcycle insurance, I don't know if they do motorcycle insurance or if it's just vehicles, stuff like that. They expand to other avenues, then it could actually go up much higher. But as of right now, for this week, they are in the highs, so we'll keep an eye out for that in the upcoming future. But for now, it seems like they're trying to reach back to where its previous high was. Well, maybe not IPO high, but at least it's where it was before the massive drop back in February 2021. All right, so next company here is a company known as Snowflake. I actually don't know anything about Snowflake, at least from the actual description itself that it gave. But basically, Snowflake provides a software solution. The company develops database architecture, database warehouses, and query optimization and parallelization solutions. I have no idea what that means, but I'm assuming they just do like some kind of basically build the infrastructure for the software, whatever that case may be. But they've been in the news recently because they've been spiking up immensely. Let's look at, actually let's flip over to the charts, but I want to kind of flip over to the 5-day history. But check this out. Obviously, early in the week, they were about $222. They were on super low as like almost $200, maybe $205, and from yesterday, and they spiked all the way up today, as high as $235 that you see right now, and upwards of 18% growth, which is huge. I guess we can check out some of the news and see why it's going up for the most part, but that is a significant change. But before we go there, I want to go to max history. Oh, they're actually pretty new as well. Okay, so it looks like the IPO'd around, let me see, okay, definitely not 5 years. So it looks like it was around October 2020 is when the IPO'd roughly. They definitely are not as high as they were. They were, wow, as high as almost $400, and they quickly dwindled down, almost half of their previous highs. So that's not a good sign. But obviously they've been spiking up recently today, and there's a reason for that. So let's kind of dabble and see why it's been going up recently this week alone. All right, so pretty much the reason for Snowflake's incredible surge here is, of course, Evercore says buy. So it's a pretty simplistic way of saying that other people believe in it, so we want you also to believe in it as well. But let's see if they talk about more detail on why they think it should go up and why such a bullish view on it. But Evercore analysis Kurt Materni, I guess, calls Snowflake a data cloud category killer, while initiating coverage with an outperformance rating and a $311 price target. That's huge. That's a huge potential right there, like from 235 to 311. So was that their highest that they've been? Let's see here. Let's check back to 2 years. Not quite their highest. Their highest was 400, but 311 is still at the right track to eventually go up in value. So let's talk about here. Snowflake is not the faint of heart, and our bullish view will play out over multiple years, not just the next few quarters. With that though, that makes sense. That makes sense. So he's not saying it's going to immediately reach 311, but over the next couple of years, maybe. And for that, I kind of agree. Obviously, technology in terms of databases and cloud storage always needed cloud storage, and I definitely see a need for this eventually. But it's pretty pricey, pretty expensive, $235. But if they're thinking to themselves for the near future, eventually we might see like a split to kind of lower that value so more people can actually buy into Snowflake. But right now, it's kind of pricey for me, and I personally don't recommend it as part of my Talos not picks, I guess. But that's my personal opinion, obviously. If there's any comments that you guys want to talk about, definitely let me know in the comments down below if you guys agree with me or not. But of course, cloud storage is always needed. But at the same time, at that price range, it's hard for me to jump into it at the current state. You really have to believe in the company for long term. But we definitely have to wait and see how this goes. He addressed that the market value at $78 billion by 2024. So we'll see. All right, so that was pretty much all the highs for the week. Now let's talk about some of the lows, and we have quite a decent amount of lows, but there's a couple that we could probably group together. But yes, the first of which we want to talk about is Discovery. Discovery A, B, and C. Pretty much all of them have been down. I think there's even a D. I don't know. There's a lot, but all of them are down this weekend. So Discovery, and oh my geez. I'm only looking at its 2-year history, and the 2-year history looks pretty fantastic for the most part, actually. And this is only for column A. So let's flip over real quick. Let's flip over real quick. Obviously, I haven't looked at the 5-day history, but look at the 2-year history. As low as what's that? $20, $21. Jumped up double. It actually went as high as $78 actually, and now it's $41. So it kind of corrected itself a little bit. So let's actually scroll down a little bit. 3 months. Look at this massive growth, and then boom, done. So let us find out exactly what the hell happened with Discovery. Not just one, but all of them. Not just one, but all of them. Look at this. $76 all the way down as low as, what was that, $36 I think, 37 roughly. That's huge. All right, let's find out why, guys. I'm very interested. All right, so here is the reason why it plunged today. What happened? Shares of Discovery A and K were sinking again today. Investors continue to bail out of a suddenly popular legacy media stock like Discovery and Viacom CBS, which recently launched streaming services. There's no particular news out on Discovery, but trading was so volatile that it was temporarily halted this morning. Yes. However, Discovery said that the volatility was not because of the results of insider transaction or trading. As of 1:40 p.m. Eastern Standard Time, Discovery Series A stocks went down 27%, while Series C has fallen 30%. Meanwhile, Viacom CBS stocks were down at a similar percentage. There was probably a total of 50 million shares trading, the trading volume, all before 2 p.m. Eastern Standard Time. So it looks like here, the reason why it fell is because in part of the, because Viacom CBS stocks fell in part because the downgrade from Wells Fargo, which lowered its rating on the Paramount Plus owners to underweight. So yes, for those that may not know, Paramount Plus is now a thing. Paramount's own streaming platform, and I guess they just don't believe in it. I personally don't really believe in it because we already have Disney Plus, we already have Netflix, we already have Hulu. What else? Like those are the big three that I know of right now, on top of my head. And there's multiple other. And Paramount Plus, there's just not a lot of things I can see unless they do original content. But even still, even Apple TV does original content, but it's not really forcing a lot of people to get Apple Plus. I think that's what it's called. I forget. Or Apple TV, I think. Because people already have Netflix. They already have Disney Plus. They don't need anything else. And Paramount Plus, respectively, I think it's just too little too late, I think. There's not enough market for it. And people already have so many subscriptions. They don't want another subscription. If it's bundled with maybe Hulu, maybe Paramount Plus will be added there. But as of right now, I can see why it's going down. Oh yeah, so okay, perfect example. These are all the platforms right now: Disney Plus, Apple TV Plus, Peacock, HBO Max, Discovery Plus, Paramount Plus. Oh my God, there's so many. What the G's? So they're getting subscribers. So it's not like they're not getting people in there. And this is also kind of interesting too. It says here, even with the amount of subscribers that Disney has, it says here Disney's streaming division is still not profitable, even with more than 100 million subscribers. So 12 million, yeah, they're definitely not profitable. Like obviously there's probably more lingering reasons why, but there's just loss in belief in the streaming platform. Now it's not because the streaming platform is failing yet. It just started, so they're building that infrastructure, they're building their audience and whatnot. Apparently 12 million subscribers, so it's not like they're failing per se, but there's just not a lot of investors that have like faith in it, and I personally don't, and I'm not even invested in them. So but take it as you will. Obviously, let me know in the comments down below if you agree with me or not. But Paramount Plus, Discovery Plus. Yeah, let's move on to another low. The next low, which also is kind of fascinating, Lending Club. Now, this is also a lending company. Obviously, for those that may not know, it provides internet financial services. It offers online marketplace for loan approvals, pricing services, and support operations, as well as a regulatory and legal framework, which basically connects borrowers and investors. And what I find fascinating about this is also a lending type company, but they haven't been going high as Upstart is. So let's find out exactly what's been going on with Lending Club. Now, if you flip over to the charts right here, this is a 5-day chart. They've been kind of going down steadily for the week, steadily going down, and then sometime today, right around 12:55 a.m. this morning, I'm not sure if that's Pacific Standard Time or not, but look at that quick drop to pretty much $12, but it has recovered a slight bit, but still in the negative. And according to this chart, negative 10%, almost 11%, actually pretty much 11% negative in that. But what's been going on with Lending Club? Like, why the dip? Probably a downgrade, and but we'll check it out real quick. All right, just a quick little summary here. Club stocks pair decline after a Wedbush defense. Lending Club negative 11%. Shares paired losses in late trading after Wedbush analysis Henry Coffey is issued a note saying that investors' concerns over actions taken by Democratic senators to overturn the OCC's true lending rule is misplaced. Now that Lending Club owns a bank, it has no exposure to the issue and has been the case for a lot of this year. Stocks tend to move frequently on ignorance and panic than facts and substance, he says. Yeah, there's not really much data that I can go by right now in terms of Lending Club of why it went down significantly. More so like a panic sell than anything. But for the most part, like there was a increase in share value in terms of the price target by Wedbush into I think $25 from his original $20. So he's thinking that it will go up, but for some reason a panic sell somehow happened, and that's what they were talking about in that article. Past years doing pretty dang good. Obviously they're as low as $5, spiking all the way to as high as $22. So it's not like they're not getting shares there. I don't know. Obviously, I'm throwing the question back to you guys. What do you guys think about this? Are you guys into a Lending Club? Do you think this is a long time future? Is there a longer history on this? Okay. If you kind of back it up to max, that's telling. That's very telling. This is back in February 2015, and it hasn't seen the light of day. It's been recently going back up because it dropped so low to $5. Maybe not so much of buy now. So it's kind of good to like look at the history and like a 5-year history and just kind of read about like what's been happening with this company. Are they not getting as much? Now, the one thing I will say about Lending Club real quick is their interest rates are pretty high, even more higher or in par maybe to Upstart, maybe even higher than Upstart. So they're not really like being as innovative. I think when you go to the website for Lending Club versus the website for Upstart, it doesn't feel as like as welcoming, at least personally as a user or a consumer myself. So they really need to like kind of either up their website or like maybe modernize it a little bit. But right now I just don't see it with Lending Club. Going to another low real quick as we roll into the next topic. AMC networks. So AMCX is what they're called here. Obviously different from the regular AMC. This one's a little bit higher value. I think it's like $54 from its current value here. Whereas AMC itself, just the theater itself, I think was like floating around the $20, $15 mark, maybe $10 mark, I forget. Just so not to be confused with that one. So let's roll into this one real quick. This is the 5-year history or the max history of it. The highest it's ever been was $85. And it's been consistently dropping since about 2019, March 2019. And it just can't seem to recover. It went as low as about $22, and it's been recently going back up to $65. So that's actually a pretty huge spike there. When did it happen? Right around, I guess, November 2020. It's been going up, so interesting. But let's look at the 5-day history, because that's what this is all about, the week history. As you can see, massive negatives from $68 as low as $50, it looks like. So obviously, for those that may not know, this company it produces programming and movie content. It owns and operates various cable televisions. Obviously, it includes AMC, IFC, Sundance Channel, WeTV, and IFC Films. So let's kind of read about it. See if there's any articles in the news of like why it's been going down this week, or maybe it's just how it is. It just there's less belief in it. I don't know, but let's see what we can find. All right, looks like the big reason why, similar to why Discovery also went down, is it tumbled because of a Wells Fargo downgrade. Discovery, of course, we talked about earlier, down 20%. AMC Network is lower by almost 9%. Nice and simple. That's the reason why it's going down. Pretty much that it's been downgraded by Wells Fargo, and pretty much for being too expensive, too high value, and they just don't see the evaluation matching up for what it's offering. Obviously, AMC movies theaters that for most part I think are still down. There's no movies that I could think of that's coming out in theaters relatively soon. There might be a few. I think obviously there's a few coming out, but I don't believe they're AMC theaters. I think they're more IMAX theaters. That's why IMAX has been going up. But AMC, I don't know. I don't see any theaters, like specifically movies coming to AMC. But you can always correct me down in the comments down below on that. But simple reason, downgrade, obviously stocks will plummet. Now the final news topic for today, which is pretty much 3 companies right now that I can kind of bundle together for this final discussion. Of course, those 3 companies being Tencent's Music Entertainment, Neo, which you know about Neo already, and of course the final one being BADU. They're all Chinese-based companies. Obviously, we know of Tencent's Music Entertainment, obviously being about music, but they also do other stuff as well. Tencent, they also do video games. They own, I think, they own Riot Games, I think 100%. So if you guys are familiar with that, they own a bit of Fortnite, but correction, it's more, I guess, Epic Games. And of course, Epic Games has been expanding here in the US to include its own Epic Games Store, which Tencent owns roughly about 40%. I think they might own more of it. And of course, if I'm wrong on that, you can always correct me in the comments down below. But of course, we talked about Neo. Neo's been kind of up and down pretty much quite a few weeks. And of course, the one that I want to talk about real quick is BADU. Now, of course, BADU right now has been going up today about 2%. But if you look at its history, which we'll flip over right now, this is BADU's 5-day history. It was as high as $262 and it quickly was as low as $177. And it's been kind of recovering a little bit. Now it's sitting at around $208 today. But that is crazy loss. So, and of course, if you look at Neo, kind of the same deal. $43, dipping as low as $34, kind of recovering more at the tail end of the day. And the same kind of applies, of course, to Tencent's Music. As high and early in the week at $31, when as low as, what was that, about $16, and then it kind of recovered a little bit. Now we're going at about $20 here. So they're all kind of related, Chinese-based companies, like I mentioned. Let's actually look at a quick article to see what's been going on with these companies. Or is it because they're Chinese companies? We'll see. All right, the big article here. BADU, Tencent in US extends slides after SEC's actions amidst US-China tensions. Obviously, we knew this was coming. Obviously, anything involving SEC is going to affect Chinese-based stocks. But according to this article here, US-listed stocks of Chinese-based company BADU, Tencent's Music Entertainment Group plunged this week, dropping as much as 33.5 to 48.5% respectively from Tuesday's closing levels. They initially fell in tandem with a board sell-off of tech and tech-related shares on Wednesday, when the Nasdaq shed more than 2%. They extended losses on Thursday after the U.S. Secretary of Exchange Commission (SEC) adopted measures to remove foreign from U.S. exchanges if they fail to comply with U.S. accounting standards. The regulatory move come as a time of heightened tensions between the world's 2 largest economies. Big news, obviously, pretty much for a while. In U.S. sanctions being announced against China's officials over alleged crime against humanity and genocide on, I can't pronounce that, but you can read what I just highlighted. So US and China tensions yet again in these Chinese-based stocks. Obviously, it comes down to just the economics of it all. Make sure that they follow the US guidelines that is provided from SEC. Make sure there's no data leakage or anything like that, like spying on the enemy, stuff like that. So there's a lot of high tensions going on with China and US markets. That I don't want to talk political here in this channel, mostly just talking about stocks and investment and whether these are a time to buy these type of shares. Now we saw how high Tencent's Music Entertainment is. Music, of course, in China is huge. Music industry in general is huge. So $20 is not too bad. And of course, when it comes to Neo, they're basically a Chinese-based Tesla. EV cars. Obviously, myself, I'm a big believer in electric vehicles. Not just Neo, but of course Tesla, other companies like that. Workhorse is another big one that I'm invested in, that I truly believe in, because EV is definitely the future. It's gonna be some time before it's, I guess, accepted worldwide, and that this tension between US hopefully will diminish in due time as soon as they get their accounting straight. I'm not sure if there's any accounting issues whatsoever right now, but just making sure that the accounting procedures are met and follow the US GAAP if they're going to be listed in the US market. So that's kind of like what they're going by here in this article that I've read. Same thing with BADU. BADU is pretty much, it's the largest search platform and in China right now. And so they're pretty much like the Google version over there. So they're going to be huge. sitting at $208 right now. Another company that you could probably fall into here is Alibaba. Alibaba is pretty much like the Amazon in China. So obviously these are big companies that we want to talk about. Like right now, there's no set stone of whether this is going to be a good investment like right now, because it could dip even further. We just don't know. But as a long-term investment, I definitely see this potentially being even higher than what you see right now. So definitely keep a watch out for them. Not just Tencent Music Entertainment, but also the regular company Tencent, Neo, BADU, and of course Alibaba being the big things I can think of right now from China that are going to be huge in the future as their prices continue to skyrocket higher and higher. Nevertheless, guys, that concludes this article. Obviously, guys, I'm not a financial advisor, so I can't tell you what to do with your money, but for the most part, these are pretty much my topic points today. As for Talos picks, we'll kind of keep it simple today. For picks, just from the list that we have right here, obviously Upstart seems like a pretty good buy right now. They keep going up, keep going higher and higher. It's still, I don't know, I feel like 142 is still a little bit high. I would wait for some kind of cool down, if there's any cool down, but I hate to buy into a stock that just raised 15% in a single day. So I would wait to see where it goes, maybe dip down to like at least 130, maybe 120 before I personally will buy in. Root, also pretty cheap for the most part, but you saw the charts, it was really low compared to its IPO price. But will it eventually get past it? We don't know. Hard to say, especially with the way things are going with EV and autonomous vehicles. So it's kind of like what you think is the near future and what you're looking for. And of course, China-based companies, they're kind of that boat where it's a little controversial, so it's hard to recommend them to people unless you really believe in what they offer. And of course, if they're following those SEC guidelines. Neo, BADU, Tencent, and of course Alibaba are something to definitely watch out for in the long term. But for the most part, they've been good so far. Like as long as they follow those SEC guidelines, I don't see an issue with them. But that's all I got for now. And another Talos pick that I kind of forgot to mention, of course, is Microsoft, but they're always going to be a good buy. And of course, if Discord ever goes public, I definitely recommend Discord. But that's just my personal opinion. Obviously, guys, let me know what you guys think in the comments down below. If you guys did enjoy this video, consider giving us a like and subscribing if you guys want to see more of the Studly News channel. Whether it be stocks related, gaming related, entertainment related, it's all here in this channel. And of course, follow me in my regular channel, Talos, if you guys want to see some unboxing channels. Basically, Yu-Gi-Oh, Pokemon, that kind of stuff. A little bit of gaming here and there. And of course, I will definitely see you there. That's all I got. Love you guys, stay awesome. I'll see you in the next video. See you next week for some more weekly Studly stock support right here in the Studly Boys community channel. That's all I got. So until next time, this is Talos signing out. There, guys.